Hello, welcome to the weekly market wrap. I'm investment advisor Chad Payne, and I hope everyone has a happy St. Patrick's Day coming up at the end of this week. We celebrate that all month long here in Dublin, so I wanted to get a shout out for that. We've got a couple things coming up. We have a educational seminar in our Macon office on March 21st on Thursday, 5:45. Where do interest rates go from here will be the topic. So we'll be looking out for what's going on with interest rates in this market environment that we're in right now. Also, keep in mind our first quarter referral drawing. If you refer any family or friends to us during the first quarter, you'll be put in the drawing for a $100 Amazon gift card that we'll give away at the end of the quarter. So please keep that in mind. And if certainly if you have anybody that you think we could help, we'd love to talk with them. So let's look back at markets last week. Overall, for the week, markets were up. Most indexes were, in fact. There were some all-time highs hit on Friday for several indexes, but they were only intraday as it closed slightly down from those highs. So we'll have to see what this week holds as far as reaching those records. Job openings for January fell to their lowest numbers in the last 3 months, so that may speak to a slight tightening in the job market. Also, some additional job information was out last week. There were more jobs added in February than expected. However, January, they were revised down pretty significantly from what had happened initially in January. And the unemployment rate actually rose to 3.9%. And that's as high as it's been in the last 2 years. So looks to be a slightly tightening job market. We'll continue to watch the Fed and how their reaction is and what the inflation numbers are for this coming week, as that's going to shape the Fed's policy going forward. All eyes seem to be on the Fed for market direction as well as interest rate direction right now. One little tidbit here that came from Yahoo Finance. The S&P has started the year positive for January and February 28 times since 1950. And over those times, over the next 12 months, 26 of those out of 28 have ended up on a positive note for the year, with the average rate of return being 19.9%. So we'll have to wait and see how that bears out going this year, but we are off to a good start overall in markets. So hope that trend continues and we'll beat that average. If you have any questions about your accounts or anything, please let us know. We'll be glad to talk with you, and look forward to seeing each of you next time. Thanks a lot.